Hello, everyone. I hope you're very well and safe wherever you are. Thank you very much for joining us today for this small talk. On behalf of myself and IBH, I would like to say a very big welcome for today's talk. And we're going to very briefly speak about credit and political risk insurance today and brokers' role in particular. So let's start with what's in it for me if we're talking about credit risk and credit political risk insurance. First of all, it may help to increase volume of trades, very useful tool. It may protect your cash flow, and it's a brilliant chance to cooperate with an expert in the markets, especially if you start new relationship and you're not familiar with either a market or a counterparty. Credit and political risk insurance policy could be a condition given by your bank for structuring some trade finance products with them. It can also help to smooth out the volatility of payouts, expenses associated with major unexpected events like force majeure, non-payment risk. It's especially important in the current environment when it's quite turbulent economic conditions. If you are a bank, it may help to get capital relief. So both trading companies and banks use this product. If we are a trading company, there are some really useful cover that you could consider. Non-payment risks, political risks, non-delivery risks, risks of call on bonds or unfair call on bonds, currency risks, for example, in convertibility, and my favorite, mark-to-market risks. It's really great to have this insured if you're trading around a position on a regular basis, but in my personal opinion, you need really good broker to achieve this cover. And who is the broker and what they do? Generally, an insurance broker represents their client in the insurance market. So they share their expertise and they may be a very good advisor on the policy wordings, rules, risk appetites of various markets, claim procedures if you are in trouble, renewals and revisions of the policies. They save a numerous amount of time and effort on the corporate side, and they manage your relationship with the markets by enhancing your brand among underwriters. A broker cannot change the client's risk profile, but they may improve pricing by creating competition, accessing more insurance markets than you probably can access on your own. A broker may or may not charge a service fee, and in my personal opinion, they may be a headache if they're not the right one. So if you would like to know a little bit more about lending, credit and political risk insurance, and trade finance, and how they work together, please come to our virtual courses with IBH that we run regularly.